Financial management in your 30s? This is Eva Wong here, your wealth coach to achieve early retirement. If you wish to learn how to retire early, subscribe to this channel here. You want to do well in your personal finance, you must manage your finance better when you are in 30s if you have not started anything in your 20s. Watch this video until the end. During this stage, you have new family members, expenses will increase too. If you have just purchased a new house, you have even more commitments. So what you can do? First, you take care of your family and wealth protection. Family protection becomes very important at this stage because there are more family members and commitments. If you are the breadwinner, you need to ensure you have adequate insurance protection to cover the liabilities, like the car loans and the house loan. When death happens, your family member do not need to bear your loans. Critical illness coverage is also very important at this stage because when the breadwinner suffers from critical illness, the family needs more money for the medical treatment and also health supplements. The breadwinner might not have the ability to work anymore. Hence, in this case, family income will reduce tremendously. One needs to protect the income via the critical illness insurance payout. The next question you might ask is, how much coverage is adequate? In general, the death coverage shall be 10 times of your income and the critical illness coverage shall be 5 times of your income. At this stage, you will find that you have much more family expenses than when you are in your 20s. So how you can save more money on the protection? You might consider buying just the term life insurance. Keep the insurance cost within 10 to 12% of your annual income. Second, start preparing for your retirement fund. In 30s, it is critical to start your investment if you have not started before. Channel at least 20% of your income to the retirement fund. Watch the previous video I recorded for calculating the retirement sum. The later you start, it will be more difficult to accumulate enough retirement fund. I shall talk more about the investment strategy for retirement in the near future. Third, if you have children, you need to set aside extra 5% of your income for their education fund. Education is the best gift parents can provide for their children. So you always need to make sure you have some money for them to pursue higher education. The more time you have, the easier it is to accumulate enough fund for them. You don't want to regret not having enough money when they are ready for higher education. Fourth, scrutinize your tax and maximize the tax benefits given by the government. In 2020 tax year in Malaysia, you can get tax relief up to 3,000 for your life insurance premium, 3,000 for your private retirement scheme, 3,000 for your medical and education insurance, and 8,000 for SSPN, which is your children education contribution. As a smart person, you shall maximize these benefits because you need to protect your family, save more for your retirement and children education. While doing the necessary thing, you can save more taxes concurrently. Fifth, work smart and not work hard. You cannot work harder and harder when the expenses keep increasing every year. You need to balance your family time and work time. Start to increase your sources of income, ideally some passive income stream. Expenses will always increase until your retirement age. To maintain the same saving rate as before, you need to have more income sources. You can also consider upgrading your professional skills so that you get paid better. Alternatively, you can start to have some investment properties, creating a business or intellectual properties which can bring you more passive income at the later stage. Sixth, watch the saving and the loan interest rates. You need to invest more than saving because the saving rate is too low. You can schedule paying a little bit more loan payment every month so that you can finish paying off the loan faster. Pay the one with the highest interest rate first. What if you cannot allocate the above mentioned amounts for the retirement and children education? Then perhaps you are spending more than what you can afford. You shall try different ways to earn more income. You can watch my previous video on the 7 types of income sources to get some ideas, or you can try to reduce your expenses by watching my previous video on how to spend wisely. That's all for my sharing, and thank you for watching this video. Do subscribe to this channel for more early retirement tips, and I hope to see you again. Bye!